when you see massive market cap names like Facebook completely implode, it starts to get interesting. I think that stock I've been starting to nibble on after the 27% correction. I think the stock could trade below $200 by the time this correction is over, because I'll tell you what's going on right now. As you know, I spend a lot of time talking to sovereign and pension plans. So I'm asking them, what's going on with your positioning on Facebook? Now, many people thought that Facebook was a stock that was owned by retail. It's not. The majority of the ownership of that were sovereign and pension plans. And so they had a full weighting in Facebook, up to 5 and 6% allocation. They're readjusting that down based on the new risk. They now see the risk in the Facebook business model. They're concerned about some of the policy changes for the metaverse, changed about issues around government regulation, whatever else you're concerned about. So all they're doing right now is reducing it from a 6% weighting, maybe down to 3 or 2. And that's going to continue on for a few more trading sessions, probably 3 or 4. But if you're prone to take positions in massive corrections, this is a wildly profitable company with billions and billions of users on its platform. It's still one of the world's largest advertising platforms. So I feel compelled, while this thing is bloodletting, which is basically what it's doing, to start putting on a position, and I have been doing that. Crypto is getting interesting again. You've seen this move up again on Bitcoin, but there's a new narrative coming into the market. Very interesting narrative at the institutional level. So one of the gravest concerns people have at the institutional level about Bitcoin mining is ESG. And you and I have talked about this before, but it's becoming far more in focus now. For example, if you actually are a Bitcoin miner and you're buying carbon credits to offset your dirty carbon emissions because you're using traditional electricity made by burning gas or burning coal, it's not cutting it anymore at the institutions, because they know with certainty that Bitcoin miners can be set up in hydroelectric zones where they can make Bitcoin mining where no one has to buy a carbon credit because there's no carbon involved. And so capital is starting to move in that direction. And so what you're seeing is institutions say, I'm going to sell the stock in, let's say, a Marathon or a Riot, any of these miners that are buying carbon credits, dump that stock, redeploy that capital into mining operations where they're located in hydro zones, northern Norway, northern Manitoba, northern Quebec, northern British Columbia, northern upstate New York, where all of these water resources provide an abundance of hydroelectricity, where a lot of it is not used or stored. Now you can turn that into stored value in Bitcoin mining. That's the direction that we're going, and that's where I'm putting my capital now. I'm selling off the dirty miners and investing in clean hydro-based mining. I think there's a very interesting space, but the real direction of that is the metaverse. I believe in the next 3 to 5 years, when things continue to move online, particularly experiential advertising, you're going to find that in the metaverse. But where? It's going to manifest itself in gaming first. And so we're going to see a lot of gaming happen. And I think, esports is a big part of that. I think this is the direction it's going in. Another reason you may want to think about Facebook, going back to that discipline, there's 2 directions of the metaverse. The unruled, uncurated metaverse, where you're a big brand, let's say Procter & Gamble, you could find yourself set up in the metaverse right beside a porn shop. That's not going to happen in Facebook, where they're going to curate the metaverse. That may have more value long term, because if I'm putting up a brand that I'm trying to protect that means something to me, I don't want to put it up beside a liquor store maybe, or a porn shop, or whatever else is on the metaverse that's unregulated. Facebook probably will have the largest curated metaverse, maybe something to think about long term on that stock.